Well, welcome everybody. My name is Dan Bisig, and I'd like to introduce you to a software package that I really think can be a game changer for you. It's called College Aid Pro. And in particular, the reason I love this software is because it's all about trying to end the student loan crisis by empowering you, families, to shop smarter for college. We spend all kinds of time and effort when it comes to looking at our vacation plans, buying a car, buying our house, buying a boat, whatever it might be. But a lot of times families just avoid the whole topic when it comes to paying for college. And so I'm going to try to empower you tonight by understanding the process, understanding financial aid a little bit more, and also understanding this tool that can really help change the game for you. So again, my name is Dan Bisig. Just some quick information about me. I've been an independent counselor now for 17 years. I work with hundreds and hundreds of families over that span of time on the entire college process and/or bits and pieces. And truly, I believe that when it comes to affordability, it's one of the biggest issues that families never get around to talking about. And so we're going to jump into this tonight so that you've got a chance to learn more about this. The easiest way to do this is that you should start by setting up your own account by going to mycap.collegeaidpro.com. What's really, really nice about this software is that it comes with some incredible resources. First of all, it's a free tool that you can have access to, and it will give you the ability to type in up to 3 colleges at no cost. And so you'll be able to get into the nitty-gritty of the school based on, whether or not a student's going to qualify for scholarships, or whether or not it's going to fit you from an affordability standpoint. Just some really, really great, transparent information that every family, regardless of whether you can pay for college, needs to know about. Now, you do have the ability to actually do upgrades on this program as well. And if you do that, it unlocks some other tools. For example, it unlocks the ability to see all of the colleges in the database, over 3,400 colleges. It has a scholarship search tool built into it that has $5.1 billion worth of private scholarships. It'll give you, line by line guidance for the FAFSA and CSS profile, or the ability to get that kind of information, not to mention workshops and things that are out there. So just keep that in mind. So what is financial aid? Well, you know what? In the grand scheme of things, I should say, it's a discount to the sticker price, right? There's this thing called the cost of attendance. And when you look at the cost of attendance, it's based on a variety of things. The cost of attendance will be tuition and fees, room and board, books and supplies, miscellaneous expenses, and so forth. But financial aid in and of itself is made up of specific components. First, we've got need-based grants. This is free money that the colleges and/or states and even the federal government give to students to help pay for college. So we love that kind of money, if you can qualify for it, by the way, because again, it says need-based. The next is merit-based. Now, there's all kinds of merit-based scholarships, and it's free money that's awarded based on the student's talent, for example, or their athletic ability or their academics. And that kind of information is then, or that kind of money is then provided by the colleges or universities to a student. And then last but not least, there's self-help. And self-help includes college loans and work study. And the thing you have to know about this is that it's not free money. It comes with a cost, whether it means that the student is working on campus in some capacity, or you're taking out loans and ultimately those loans have to be paid back. Now, look, for those of you that are, all excited right now about the fact that loans are on a freeze and that maybe $10,000 might be eliminated, the truth of the matter is that machine will start back up again. It's at $1.76 trillion, not billion, trillion dollars that we've got out there. And the cost of college is only going up every year. So the question is, what type of financial aid is your family going to receive? You need to understand this. Will you be eligible for need-based financial aid? Okay, it all comes down to these 3 components here. There's this formula called the COA minus EFC equals need. Again, cost of attendance is the sticker price. As I said, it's tuition and fees, room and board, books, and miscellaneous expenses. And then from that, we take off what your expected family contribution is. And there's a change coming to this. Actually, this year, it's being changed to the Student Aid Index, SAI. So what does the college think that you should be able to pay for their school? whether it's a junior college or whether it's an Ivy League school. It doesn't matter. There's a dollar amount out there, I promise you. So you take the overall cost minus the expected family contribution, which we hope is below that, equals need. And so that's going to be any amount of financial aid that the college is going to reward or the federal system is going to reward to your student and your family to pay for college. The question is, how much of that's going to be free money? How much of that is going to be self-help or debt or work money that has to be paid? There's only one way to figure that out, and that's to do either calculations in advance so that you're prepared for that. And that's truly what we want to make sure that you do, because we want to make sure that you know what you're getting into. So what should we know about this EFC or SAI? Well, the things that are considered, first of all, what's considered an asset? It's everything but your retirement accounts. So it's not going to be your 401k plan or your IRAs or your 403bs. That includes your Roth IRAs. It's not going to be life insurance cash value. It's not going to be annuity values. Those things are all protected assets, at least from the federal methodology. When it comes to parents' assets versus students' assets, there's a big difference. You see, parents' assets are factored into your EFC at a lower percentage. So for example, the worst case in the federal system is that they count at 5.64% against financial aid versus students' assets, which count at 20% against financial aid. So you can see there's a huge difference. Now, one of the places that people sometimes get confused is they think that a student's 529 plan must be an asset of the students. And yet the reality is it's truly an asset of mom and dad's, which is a good thing, by the way, folks. Because if it wasn't, then you're dealing with the whole side of 20% versus 5.64%. Now, one of the questions that sometimes comes up is families say, is my debt considered in this? Whether it's my auto debt, my home debt, my credit card debt, my own student loan debt. And the answer is no. No, it's not. But depending upon your situation, maybe you can move some assets that you've got that's just sitting there and help to pay down some of that debt so that it actually acts as a positive for your situation, reducing your expected family contribution, if that makes sense. And also another thing that often comes into play is, does my home equity come into account when it comes to financial aid? And the answer is, it depends on what financial aid formulas the school uses. Are they using the free application for federal student aid, also referred to as the FAFSA, or are they using the CSS profile? Or a combination of both, by the way. You need to know that there are about 200 colleges and institutions out there that do indeed take home equity into consideration in some fashion or another. But when it comes to the federal system, they do not count the home equity at all. So if your student is applying to a school that only uses the FAFSA, then you're not going to have any trouble with that. So do your research and make sure that you know what you're getting into. Also, if you do have to put down the home value, there's nothing wrong with what we talk about as a fire sale. The idea would be that if today you had to go and sell your house, you probably would be willing to take a 15 to 20% cut if somebody just handed you cash. Maybe not, but the stock or the whole housing market has really, really changed over the last span of time. But it just depends on your situation as to what that value really translates to. So when it comes to income, you have to understand how this whole thing works. They're looking at something called the prior. And what that means is that depending upon the year that your student is graduating, so here we've given you an example, the class of 2023, they're looking at your 2021 tax returns. For those that are 2024 graduates, it's your 2022 tax return. 2025, it's your 2023 tax return. Now, why is this such a big deal? Well, because it's possible that you had some strange events that have happened or unique events that happened in that particular year. Maybe you had an inheritance that came in that had to be reported. Maybe you sold a house and you haven't quite purchased that next house yet. And all of those things have increased your taxable income, which does what? It also increases your expected family, or in this particular case, your student aid index. What they're referring to is on your tax return, it's line 11, which is your adjusted gross income. That's the number that comes into play from the federal standpoint and also the institutional as well. And do know this, that students do have some protection here when it comes to their income. they can actually have, there's an allowance that's up to about $7,000 where it has no impact on financial aid. When you cross that mighty barrier, though, now it's 50 cents on the dollar when it comes to financial aid. So, or its impact on financial aid. Moms and dads, you do get a income allowance as well, but again, it's going to be a very small number. I can tell you for a family of four, it's about maybe $29,000 or $30,000, which means that anything above that counts at 22 to 47% against financial aid. So you've got to know what your base year income is and its impact on this whole thing. And also realize that today your circumstances may be different than they were back during the time that that tax return was done, either to the positive or to the negative, which is why financial aid forms have to be submitted year after year because of changing circumstances. Now, when it comes to whether you're going to qualify for need-based financial aid, it's some pretty important things that you need to know about. You know, it's merit aid and competition. You know, when we're really looking at the money issues that come into play here, you really do need to figure out whether your student is eligible for scholarships. You know, are they going to get need-based aid? Meaning, again, the cost of attendance for the school is higher than the expected family contribution or your student aid index. If that's the case, maybe there is some need-based aid. But if not, then there's only one person sitting in the room who has the ability to impact the overall cost of your school. And that's going to be the student. And that's through the scholarships that they may or may not be able to qualify for. That's why the MyCAP software is so unique, because what it does is it's going to show you whether or not the schools that you're looking at applying to are going to give you merit aid or not, and how much aid they may give you or not. In other words, we're giving you a projection as far as what we know from past experience of what these schools are going to do. Also, again, it's the difference between schools that require the FAFSA or the CSS profile, because you really need to know that that's how need-based financial aid is determined anyway. The other thing is you're going to find that some schools are more generous than others. There are schools out there that will meet 100% of financial need of your family. And in other cases, again, they give zero merit scholarships out. And so the sooner you know this, the better. And that's why, you know, you also need to make sure that in the future, if you're hoping to get schools to compete against each other, that you're applying to competing colleges. You know, the idea here is that if you've got colleges that are in the same football league, then there's some opportunities there where they are likely going to compete for you, the student. So make sure that you do everything that you can to try to put yourself in a position. You know, the whole idea is that we're looking for the value of the schools, so that you're getting the lowest cost to be able to get in there. And also that sometimes that you can find, even with some of these bigger schools, the very best way that you can, you know, experience taking the big out of a college is actually to get involved in honors programs. So, and or that you can go to a bigger public university at a fraction of the price and still get, in my opinion, an Ivy League educational experience by that honors program or honors college that you may be involved in. Now, when it comes to these merit-based scholarships, you need to know that traditionally it's the Office of Admissions that's giving this money away, not the financial aid. I mean, they're the ones that are going to be doing the need-based aid, but merit aid is given out by, again, the Office of Admissions. Some colleges will absolutely use scholarships as a way to kind of entice you to come to their school. One of the best examples of this is two schools. Bellarmine University down in Louisville and Kalamazoo University over in Michigan. Both of these schools claim that they give every single student merit-based scholarships. Now, I always say, why not just reduce your overall cost? But it's a marketing ploy, okay? It's a way to say, look at what we're going to give you as far as rewarding you. The truth of the matter is it's a discounting that they're doing, folks. They're just discounting their overall rate, and it's actually factored into their total budget anyway. So just realize that it's enticing your student to think that they're getting something for a program that they would have gotten anyway. Usually merit-based scholarships, again, are based on your grades. Usually it's unweighted GPA and test scores, unless the school is 100% test optional or test blind. And that's something you've got to do some research on. And then there's all kinds of different awarding methodologies that you need to make sure that you look into. The other thing that's important is that usually these scholarships are for all 4 years. However, there are sometimes exceptions. At the University of Kentucky, for example, the Otis Singletary Scholarship, which is the most competitive scholarship, excuse me, to get. See, it's getting me all choked up. That particular scholarship covers tuition and room and board the first 2 years, but only tuition the second 2 years. And so it's not truly a 4-year full ride scholarship. So what are you going to do in those last 2 years when it comes to covering that additional cost? You better be prepared for it. And last but not least, private colleges always have the ability to do something that public colleges don't have the chance to do, which is that they can discount their rates. They can absolutely do whatever they want to. Just like I said, when it comes to Bellarmine and when it comes to Kalamazoo, they're discounting their rates to try to attract students to their campus by, saying, look at what we can give you, to come to our school. But let's not forget that those colleges are already $60,000 or above to be able to go there. Starting price, that's the cost of attendance. So again, make sure that you're doing the research and understanding what that looks like. What's it going to take for you to qualify for merit-based aid? And again, here's some examples of what we're talking about. Schools that are really, really solid when it comes to merit-based aid are going to be like, Willamette University, Denison, Case Western Reserve, and the University of Alabama. I mean, those schools in particular, Alabama just does a fantastic job of being very clear with the merit scholarships and really giving a lot of money away to attract high quality students to their campus. And then there are those schools that aren't going to give out any merit aid or very little merit aid. But no merit aid would include Harvard, MIT, Northwestern University. Notre Dame has a little tiny bit, but very, very little money that normally comes. These are all going to be need-based, 100% need-based schools that if you've got a financial need, they'll help you fill the gap. So how do you apply for financial aid? Well, no one school's alike. I mean, they all follow different parameters and they all have different deadlines that, that you've got to understand, and you've got to make sure that you're on top of it. They're all going to require the FAFSA for sure, the free application for federal student aid. But you're going to find again that some of these schools also require the CSS profile and or other institutional forms in addition to that FAFSA. So make sure that you do the research to understand that. And also this, it's the responsibility of the student or parent to know the deadlines and the requirements. Sometimes these colleges require you to upload tax returns, W-2s. There may be additional documents that they expect you to complete, additional questions that you have to answer. For example, Harvard will ask you, what is the make, model, and value that you put on the types of cars that you drive and own? Not making that up, folks. And so it's all about you fulfilling the requirements that these colleges have for even qualifying for financial aid. And whatever you do, do not miss those deadlines, because if you do, you're going to pay the price. So we've already talked about the FAFSA, the free application for federal student aid. You need to know that it opens up for seniors on October the 1st of every year. Now, I point that out to you because every year there are families that sometimes want to get an early start on it. They think, oh man, this is great. I can start working on it before it gets crazy. Well, the issue is that if you start working on it too soon, specifically before October the 1st, you're actually applying for financial aid for the spring of your senior year. Well, you're still in high school, so that doesn't make any sense. So wait until after October the 1st. Also know that you don't have to rush into it the very first week. Usually there's challenges based on, it crashing, issues that happen with logging in, all kinds of things like that. So give it a little reprieve. There will still be time for you to do it. And yes, there are some states, Kentucky happens to be one of them, where in some cases, when it comes to grant money, it's a first come, first serve basis. And so you do need to get it done. But again, it's not going to hurt to start on that the second week. Again, for the 2023 graduates, class of 2023, you're using your 2021 tax return. Obviously, you guys should all know that by now. But for those of you that are 2024, again, you understand it's 2022. The prior we've already talked about, and then the deadlines. Deadlines, again, are paramount. Can't stress that to you enough. If you miss a deadline, you could miss out on free money, especially the endowment funds of a particular college. Now, the thing is that's important on all of this is that you need to create what's called an FSA ID. So you go to fsaid.ed.gov to be able to set this up. There needs to be an ID for the student. By the way, it should be with the student's personal email, not their school email, and also their cell phone number. And then for the parents, with the parents' personal email address and their cell phone number. Do not cross mingle those, because you could create a nightmare for your situation when it comes to actually getting them verified, because it takes about 3 to 5 days for it to be verified by the Social Security Administration. And then also for you then to be able to use them to sign electronically this document at the end, which you have to be able to do. So again, each student needs to have one and one parent needs to have this. And in a divorce situation with the FAFSA, you have to know that only one parent, the custodial parent, is the one that's going to be completing this. Now, this is getting ready to change, folks, just so that you know, it's going to be the parent who provides the most financial benefit to that child in the future. So just think that through for a minute, because it's really, really important that you know who's going to be completing it. And you're going to create your username and password, and there's a 2-step verification process that has to be gone through. So it's something that you don't take lightly. Make sure that you work on this early to get it done prior to that October 1st date. And then there's the CSS profile. This is a whole different animal. It's on the College Board's website for those of you that are taking advanced placement classes. If you don't, then students have to go and set one of these up. There's, again, 200 colleges that require this. Home equity is treated as a liquid asset. Now, there are some exceptions for colleges out there that use the consensus methodology. Don't have time to talk about that, but just understand that that's where the software, the MyCAP software, really comes into play, because it helps you understand which of the formulas they're going to use. Now, with divorced and separated parents, here's the gotcha. The gotcha is that, unlike what I said with the FAFSA, where it's only one parent, like in a divorce situation, in this case, it's both parents. And if you're remarried, that means you could have, 2 sets of families that you're having to put income and asset numbers down for. It's much more of an invasive and complex process. I'll tell you that right now. It's going to take you a lot longer to complete it. This year, they did a revision to it, which even complicated it that much more. If you're a business owner, you absolutely have to put business valuations down. And here's another thing that business owners sometimes do is they'll take like depreciation on their tax return, which can drop and or losses, on their tax return, which drops their taxable income. Well, in the case of the CSS profile, it adds all of that back in. And so your income is going to be significantly higher, which does what? It jacks up your expected family contribution from the institutional side of things. Just realize that this is something that I help my families do, as I help them complete their FAFSAs and their CSS profiles. This is a standalone service that I also do. It's something that's definitely worthwhile, to look into. All right. So some pros and cons of the 2023 FAFSA changes that are coming. That's right. You need to know what's happening here. Number one, there are going to be more resources for low-income families. In other words, it's going to be easier to qualify, for example, for the Pell Grant. And the Pell Grant amount is going up, which is a good thing. Also, they're dropping the questions from about 136 today down to about 35, which is a good thing. Child support is going to be treated as an asset, not as income. That's a positive as well, because it means that it counts at a lower amount. Some untaxed income is going to be totally eliminated, which I totally support. So things like workman's comp, veteran benefits, your 401k, 403b, pre-tax contributions right now get added back into your income. Well, that's going to disappear in the future. And then there's some other untaxed income that's also no longer going to be there. So those are really, really big pros. I love that they're doing this. Now let's talk about the cons. You have to know families with multiple children will no longer get a discount. Right now, if you've got children that are in school at the same time, they basically take your expected family contribution becoming the student aid index, and they divide it in about half for each child. That's no longer the case. Now it's going to be that it's the same dollar amount per child. So think about that for a minute. If your expected family contribution is $40,000 and you were looking forward to it being 20 and 20, now it's 40 for child 1 and 40 for child 2. That should make you mad, by the way, folks, but that's the way it's headed. The other thing is, it's going to, again, in a divorce situation, going to be the parent that provides the most financial support in the 2 households. That's what the way they're looking at it. And as I said, it used to be the custodial parent. And then the other thing is there's the deductions and payments to self-employed SEPs and simple plans and other deductions are delineated on the 1040 are still going to be considered untaxed income. In other words, right now that money doesn't even show up, but in the future it will. And so that's not a positive. There's other things that are coming, so stay tuned. That's something that we'll talk about maybe at future sessions. So here's what I want you to do. If you don't like the cons, the types of things that are going on, then make sure that you join us. Sign up for this whole petition that we've got going on through the MyCAP program. It's all about trying to get people involved to say, this is ridiculous that you're going to do this type of thing. So, reach out if you're interested in that. I'll be happy to get you connected with it. So how do you appeal these financial aid offers? So you've gotten this offer from the college and you're sitting back going, oh my gosh, is this fair or is it even enough? Well, you need to make sure that you tell a compelling story. You need to bring the color into the whole thing, the background to your story. They're going to ask for specific, or you need to ask for a specific amount of financial aid. And the reason for that is if you allow them to determine that, then they're going to give you what little they have to try to get you to back off. You also can use as leverage other awards offered by other colleges, but back to something that's important. It's all about having competing colleges, meaning colleges that, where a school looks at that other school as a competition for their own incoming freshmen. If that's the case, then you've got some opportunity to leverage that against them. Also, challenge expenses not considered on the taxes. I mean, there may be some expenses that you have. Maybe there's expenses for healthcare. There could be expenses for taking care of a parent, or any number of things that haven't even come into play that you need to make sure that you're making them aware of, and or changes to your financial circumstances. Whether somebody's been unemployed or they were off because of being sick or whatever these things might be. And the other thing is you need to be persistent. I'm not talking about being a pain in the butt to these folks. What I'm saying is being pleasantly persistent, where you're keeping up with them and trying to work through this to see if they can come up with a better offer for you. I promise you, if you'll do this, you got a better chance of having some success when it comes to making an appeal. So again, my encouragement to you is go ahead and set up your account. Go to mycap.collegeaidpro.com. It's free. It'll give you the ability to set it up. You'll see that when you're done with that, you suddenly end up with what looks like the example here in the left-hand side. And truly, it's going to give you some facts on up to 3 colleges. If you decide to upgrade, you can do that as well. But I promise you it's worth your time. Because what you do not want to do is wait until it's too late and then deal with the shock and awe that comes with getting financial aid offers from colleges that you really, really can't afford to do. And the other thing I would encourage you to do is go ahead and book, it's not a 50 or a 20-minute, but book a 15-minute discovery Zoom meeting with me so that I can walk you through this. It's very easy to do. Go to collegeandbeyondllc.com. Again, collegeandbeyondllc.com. Up in the right-hand corner, click on the Let's Chat button, and I'll be happy to talk through the different options with you. But I hope this has been helpful. I promise you that if you plan accordingly, if you take steps early in the process, that you really can put yourself in a position where your student can graduate in the future and you all celebrate together. Wishing you all the very best. Again, don't forget to reach out to me at collegeandbeyondllc.com. Take care, everyone.